Uh, are you still optimistic? Could the worst now be over for the market?
Well, Charles, first off, thanks for having me back. But you're right. I mean, clearly, let's just put in perspective. I am more of an optimistic guy. We still see positives as we had in 2019 with LPL research. But Charles, the S&P 500 has been down at least 1.5% 4 days in a row. It hasn't been down 5 days in a row since the Great Depression. You know, you go to 87 and 2002, the last time we saw 4 days in a row. So what's just happened is devastating, and it's really hurting a lot of psyches. Now, the big question, though, Charles, and this is what we're getting into, are we going to have a recession in 2019 or are we not? We get into why. We don't think we're going to have one in 2019 with LPL research. Going back in history, when you look at market corrections when you don't have a recession, 3 of the last 4, going back 40 years, stopped right around 20% correction. 87 had more of a correction, but we don't think we're in an 87-like scenario. So if we're not heading into a recession, down 20% approximately, more on the NASDAQ, more in small caps, I get it. Well, you might want to be more of a buyer here with better times ahead in 2019.
Ryan, what about the threat of this market triggering a recession? In other words, becoming self-fulfilling?
Well, that's obviously a great question. And, you know, can that happen? It's possible. But at the same time, what really drives long-term gains? We know it's earnings. Now, I get it. Earnings are up 20% this year, and the market hasn't done anything. We're looking at maybe 10% next year. But what we really like, Charles, globally, emerging markets are looking at maybe double-digit earnings growth next year. Developed markets also positive. We've never had, you know, a global recession with expanding earnings making new all-time highs. So that's still a positive. But can there be a self-fulfilling prophecy? Maybe. But what are we hearing about all the people that just spent money over the holidays? You know, Amazon just came out this morning, said record holidays. We've seen, you know, MasterCard say a lot of spending going on. The consumer hasn't closed their wallet yet. We still think that's kind of the play. Yes, the Fed is there. Yes, the trade concerns, and we're not naive to those. But the underlying pinnings of a strong economy are still there in our view, and that will not lead to a recession in 2019.
No, we talk about price discovery and the role of the markets, particularly as an harbinger of things to come. This year, 2018, the key word for me has been peak. Beginning in the very beginning of the year, the earnings report, I think it was Caterpillar, one of the companies, the CFO made a comment about this is as good as it gets. So we've heard about peak earnings. More recently at the Goldman Sachs conference, peak consumer credit scores. Anyway, it won't get any better than this. So is the market going through some sort of, are they trying to reconcile the idea that we're going to grow but not nearly as fast as we have been growing? How do you find we're not as great as we were, but it's not the worst case scenario? How does the market find that equilibrium?
Right. Well, obviously, the last 2 months or so, it's been a rocky equilibrium, right? But you talk about market sentiment. I think that's where we're kind of going here. Things were great a year ago, up 15 months in a row, S&P. Everyone was bullish. And look what's happened 12 months later. Now, what are expectations now? You know, put-to-call ratios, what the options markets are doing. Highest levels we've seen almost in history. Various sentiment polls, very low. I mean, there's not a lot of reasons to be optimistic right now. But and that's a good thing from investors' long-term points of view. If you buy low expectations, should we get, you know, any positives? And we think in LPL research, we're going to get some positives on the trade concerns. If that comes out in the first quarter, that could be that first big catalyst with the still accommodative Fed. Fiscal policy, there's more fiscal policies percent of GDP next year than there was this year. That's surprising to most people. So that backdrop is still there for economic expansion.